The U.S. government and the Federal Reserve are accumulating metal, maybe as part of a sovereign wealth fund strategy. It's the Trump tariffs that have accelerated the migration, but that's not it. I think it's more along the lines of this is a plan to get the gold and silver home, to issue some form of a stable coin, some form of a system collared and pegged to gold to give the United States Treasury market in particular and the dollar credibility. And maybe they're front running BRICS by being the first one to monetize gold. Because remember what Dilma Rousseff said, the head of the BRICS New Development Bank, the former president of Brazil. What did she say in Kazan? We have agreed in principle to a new settlement token called the unit, which will be 60% currencies of the BRICS Plus nations, 40% gold in kilobar form deliverable upon request. Now, the unit would only be for central banks and commercial banks. BRICS Pay and BRICS Clear would be for the B2B and for the consumer. But systems are moving away from opaque debt instruments to transparency backed by something. And that is what Zoltan Pozsar says is Bretton Woods 3, a system that is pegged to commodities and transparency. I think it's that you're seeing confidence in the system erode. And the only way to keep the whole system from unraveling, I think, is to have some form of backing, tangible backing, and stop taking promises of governments that lie to us. And that would be using a marriage like stable coins between blockchain technology, because it comes out and says no CBDCs. Okay, fine. Well, how about the back door? And if you look at all the stable coins right now, most of them, like USDT, Tether, USDC, which is by Goldman Sachs, the new Ripple one, they're all massively backed by U.S. treasuries. So the stable coin thing is being pushed quietly, and I think that's exactly how you do it. When Judy says to me they'll issue stable coins off the 50-year treasury, I mean, that to me was the key that unlocked, oh yeah, this is what they're going to do. They're going to use stable coins to fool everyone from not taking the CBDC, think it's cool, have it pegged to dollars or have it pegged to gold. The whole thing is happening at a speed that I think is just a lot more than threats of Trump tariffs. And when you see, let me just read something to you here. In terms of deliveries that are coming into Comex, J.P. Morgan set to deliver $4 billion in gold bullion to Comex in February. Well, since November, Jesse, almost 13 million ounces of gold and over 40 million ounces of silver have moved from the London vaults to Comex. It's as if they're setting up for some form of a new system or a sovereign wealth system, whatever it is. It's bigger than just Trump tariff threats, in my opinion.
Well, let's talk about silver for a moment here. Performing admirably. We're at about 31.50, I believe, right now. A lot of people hoping, waiting, expecting for that historic move back past previous all-time highs. It should be noted the last time silver was around $50 was 2011. Adjusted for today's dollars, I think you're looking at triple-digit silver to even get back to real all-time highs. What are the main things you're watching right now in the silver market that you think people should be paying attention to?
The deliveries, number one, the erosion of just how much is available. For example, like I mentioned on the LBMA, they have 300 million ounce float. They're trading 2.9 billion ounces of silver per day, 3.5 times annual global mine supply. You see countries that are standing for delivery massively. Look at India. They've purchased 900 million ounces in the last 4 years. You're seeing China fly all around Latin America, in particular Peru, and buying up all the doré and concentrate. Now, they're paying double what the West will. Doré would be a bar that is crudely refined by the miners before they send it in for full refining. And concentrate is a sludge. You fill it up in a jar. And that would be the byproduct of the mining endeavors and the doré making. And anyways, all of this is being paid. They pay double what the West will. They ship it home to China and refine it there. 75% of all their silver used in industry right now is a concentrate byproduct. So that disintermediates the market. That disintermediates the ability for the world to price it, to have any idea of exactly how much they're buying. They're also the second largest producer of silver in the world. You have Russia, who's come out and publicly said we're adding it to our strategic stockpile. Governments really don't say that very often. And then there's some interesting things happening right now in SLV. So, a lot of the manipulation that people talk about is centered around GLD and SLV, where you're able to naked short a ETF, which makes no sense. But check this out. Over the last couple of weeks, the fees to borrow, if you're short and you need to borrow to go short or borrow shares to cover whatever it is that you need to do, SLV borrowing fees have soared from 0.05% to 12% in the last couple of weeks. The shares available for borrowing have collapsed in the last 10, 20 days from 10 million shares available to only 10,000 shares available. That's a 99.9% reduction. 953 million ounces are sold short out of SLV. This is setting up for a massive short squeeze. So you get all these people that short the hell out of SLV. And now, if there's 953 million ounces sold short, I think that works. I think it's 10 ounces per share. There's not enough shares to cover that if everyone tried to cover. I just think that when you see the massive movements from London to New York, when you see these types of discrepancies in SLV, when you see the massive purchasing, and you're looking at an asset that's coming out of the ground at a ratio right now of 7-1, 7-1. Meaning 7 ounces of gold for every 1 ounce of silver was 16-1 for 5,000 years. It's priced at damn near 80-1, and the world is accumulating it. It's because of the naked shorting. It's because of what they do on the LBMA. It's because of the 2,000% rehypothecation on Comex, where if 20 people hold a contract, one gets the silver. If he or she is lucky, the rest get cash settled. It's because of the distortions created by these Western central banks in order to support an illusion. Now, I believe silver has been suppressed largely because of the military-industrial complex. And I've talked a lot about the amount of silver used in high-tech weaponry, which ironically, over the last decade plus, has been stripped from the Silver Institute's numbers of supply-demand. But it's real, and there's lots of evidence that points to it. I would say to you that they're the reason why 8 Western banks have held the largest concentrated short position in any commodity ever traded on Comex. Those banks have been suppressing the hell out of the price of silver to maintain the ability for the military-industrial complex to make and sell high-tech weapons. Same thing on LBMA. It's the same banks. They're stupid enough to think that this game could go on forever. What is changing is that the countries... Stop it. Sorry. I got to put her down now. She's starting to bother me. That the countries that are doing this are sophisticated, that being the BRICS nations. They're coordinated, they're motivated, they're wealthy enough, they see what we're doing, and they're using it against us. See, this is where I think maybe the new administration understands that they cannot suppress the price of metals because it falls right into the hands of the countries that are de-dollarizing and taking gold over treasuries and dollars, and that's what they're doing. And I think maybe they're going to let the prices rise. And maybe this is why they're bringing it all home first. Get it all home, let the price go higher. And now you stop the ability of these countries to drain the world's exchanges, to stand for delivery the way that they are. It becomes a whole lot more difficult. So to me, Jesse, there's a whole lot that goes into this. There's a lot of moving parts. But if I had to be just plain and simple, it's the most undervalued asset on the planet. And it's the trade of a generation. I really do believe that. There are very few things I've ever seen that have asymmetrical qualities the way this does, meaning lowest downside, highest upside, and that's silver, 1,000% to me.
I want to pull on that thread you mentioned about the SLV ETF, that there are fewer shares available to borrow by quite a drastic quantity for the purposes of short selling, and that the fee to do so has also risen. Is that because so many people are short right now? It's a supply-demand issue, or is this a new policy enacted by the ETF? Why is that taking place?
Well, it's not a new policy. It's that there are a lot of players short. And look, the conventional reason for ETF outflows, so there's less shares, people are selling the ETFs or whatever, it would be interest rates, strong dollar, profit taking, et cetera. But what's happening suggests a much deeper shift. These large withdrawals, meaning there's less in the way of shares, to me, indicate that big players are cashing out before a potential exposure to the scheme. Governments, central banks, wealthy elites, they're all removing physical gold and silver from the ETFs to consolidate control of the real assets, in my opinion, before whatever happens. And you can't be naked short without the ability to pay it back. You're dead. So they're all cashing out and they're getting out. And the big money has the ability to cash out and redeem it in gold or silver. It's the big commercial banks. They can redeem their shares and take the real physical metal. You know, the whole thing with SLV is that even during the silver squeeze in February 2021, BlackRock had to overnight change the prospectus and say, well, you know, there, because of the volatility, there may not be as much silver in the trust as there are shares outstanding, and that can present a big problem for short squeeze or for shorting this ETF. Is more or less what they said. It's a setup right now where the dummies who don't understand what's happening will find out exactly how dangerous being naked short something is. And the big money, they're front running this, and they're getting out, and they're taking their shares and redeeming them for the real silver. I don't think it's as mundane as profit taking or getting away from interest rates or whatever it may be. I think it's a whole lot deeper than that. And I think to be naked short right now in silver or gold, and in particular these ETFs, which don't have enough in the way of float to cover on the other side, is as dumb as a mud wall and in a rainstorm. And I think that will bear true if this trend continues.